An update to this market-based cash balance plan presentation that I did. We've got a little bit more information now, and I know some people are a little bit confused or worried about it. Bottom line, I don't think you need to be too worried. I think it's a good deal, but we'll go through kind of what's changed in this plan. All right, the first, I have to put out these disclaimers so I don't get in any trouble. Nobody has approved this, nobody's endorsed this. I'm just trying to get good information out to the world. This is not tax or investing advice. You should go hire a pro to talk about this, but watching this, listening to this should help you frame that conversation with your professional and make it productive. And I don't represent anybody. This is my opinion only. All right. Bottom line, the market-based cash balance plan is good for most pilots. We'll get into illustrating that in a bit, but it really is. It's good. I'm not trying to sell you anything. I don't get any extra bonuses from anybody. If you participate or not, it has zero effect on my life. I'm just trying to get good information to people. Now, there will be people for whom it is not the perfect option. Most of those people will be ones who are investing in real estate or alternative investments that have their own tax advantages and high returns. If you don't already know that, it's probably because you're not already invested in them. And honestly, it will take you long enough to learn about them and get invested in them that you're better off starting in the market-based cash balance plan, putting a bunch of money in there. I believe that most airline pilots will have plenty of money to invest in alternative investments, and it's good to be in the market-based cash balance plan while you're getting into that. I don't think it will hurt you. Part of the angst surrounding this is we were under the impression that this would be an optional thing that you could jump in and out of and choose whether or not to be active in it. That's not how it is. People will get a one-time, irrevocable decision on whether they participate in the market-based cash balance plan. That is not from the company, that is not from the union, that is from the IRS. That is from the Department of the Treasury of the United States and their rules, their laws. We don't get a say in that. Sorry. It would be nice if we could jump in and out, but we can't. So you have to make a decision now. I think looking through some of this stuff will help you figure it out, but if you're still unsure, go talk to a pro. I am not a pro, but if you work for Delta, Fidelity provides free financial advice to you. If you just log into the net benefits portal where we do our 401k and you can get advice there. Or if you need, I'm happy to recommend some really great financial advisors who can talk you through this, and they're not going to charge you an arm and a leg for it. All right. In the next part of this video, we're going to go through my calculator. I have updated it a little bit. It's still not perfect. It's still not quite where I want it to be, but it's updated, and I'll try to continue updating it if I can figure out how to make it work. But we'll go through that. All right. I already covered this in the original version of my presentation, but it's real important. Exit strategies. You get to roll your funds over from the market-based cash balance plan into a personal IRA. That is an investment account that you control. You decide what it's invested in. There's even such thing as a self-directed IRA, and you could use that to invest in all kinds of things, real estate or oil wells or all kinds of stuff. Starting at age 59 and a half, you will get to do a rollover as often as every year if you want to, and you can take every penny in your account in the plan and roll it out of the plan and regain control of it. So it's not like this is locking it in forever. It's only, it's only for a little bit till age 59 and a half, and then every year thereafter until you retire. Real quick again about the calculator. It's garbage in, garbage out. I'll walk you through it. There's a lot of assumptions in it, and there's no way to know perfectly what those assumptions are going to be on income, on market returns, and all that kind of stuff. So don't finalize your decisions based on what you come up with using this calculator. Try it out, see what you get, and then take your results to a pro, and showing them the calculator, showing them your spreadsheet will help facilitate the discussion that will help you decide if this plan is right for you or not. In the first version of this question, of this presentation, there were some pending questions, some things that had to be answered before anyone could decide whether to take part in this or not. those questions have all been answered. And the information is coming out. If you don't have full access to it, there's going to be a podcast episode from the Delta MEC that addresses it. I was even part of that, so it's a really good episode. Be sure to listen to that. But here's some of the basics. What is the market-based cash balance plan's targeted return? What's important is that it's a split between stocks and bonds. Right now, it's going to be achieved through BlackRock's LifePath Index Retirement Fund, which has the ticker symbol LIRIX. You can go online right now and look that up, and I'll put a link to it in the video description below. But you can go look for yourself and see the returns. Right now, it's showing like a 4.5% return on its 10-year overall performance. That's not great, but you have to remember that the market overall is down, way down right now. We're in a bear market, if not a recession right now, and there's a bunch of debate on that. But until the recession, this fund was doing like 8.5% over the long run. The ultra long-term performance of the stock market overall is like 10.5 or 11%. So for this to be doing 8.5%, that's really good. And that is far better than any other market-based cash balance plan that I know of is getting from their investments. That's great. So take a look at it, and that'll help you decide for yourself. It's important to know that Delta pays all the fees for this. It's not coming out of our pocket. It's not coming out of ALPA. That's good. And it's also important to know that your principal contributions are protected. If the market is down and you retire, you're still going to get the same amount of money that you put into it. You're going to get at least that much money out of it, which is really important. That's really good. And there's some caveats there that'll get explained later, but that is a good provision, and it doesn't cost you anything. For pilots hired after June 1, there is no choice. They will participate in this plan. For everyone else, there is a one-time irrevocable decision. The window for that is June 1st to July 31st. And you'll have the option of opting to basically maintain status quo, maintain your current contract, which does not include a market-based cash balance plan. The podcast episode will talk about that in more detail and some other things. Just realize it's a big decision. Don't necessarily just opt out because of one or two little things, because you could be regretting it for the next 20 or 30 or 40 years. And I strongly recommend that you don't just decide not to participate in the plan because you think in the future you might get into some more advanced investing. If you aren't already in those investments, it will take you time to figure them out, to learn them, and to get good at them. You're better off participating in the plan, having the money in there. You will have other money coming in that you can use for alternative investments, and it'll be good to have these in there. So that's kind of where I am on that. That's it for this part. We're going to pause here and go to the calculator. Oh, right, real quick before we go, here's the website for BlackRock's LifePath Index Retirement Fund. I'll put the link in the show notes. You can see the returns there. You can see everything about it. Do your own research and go take a look at that. All right, let's just roll into the calculator. So this is the calculator that I built for the market-based cash balance plan. There's a lot to it. There's a lot of assumptions. You can go watch the original version of the video to see how to work everything and what it means. What I've done is I've added the purple in here. So this cumulative opt-out age and break-even year, and then these extra two columns here, the cumulative margin and the cumulative winner between the plans. And so what the deal is in the original version of the calculator, it did a horse race, right? And it said, assuming that you can opt in or out of the plan in any given year, what year should you opt in? So it went and found the point where the market versus the market-based cash balance plan win, and it showed you where that division was, and that was your decision point. And so for me, in this case, if I had less than 16 years to retirement, I should participate in the market-based cash balance plan. But if I had 17 or more years until retirement, well, technically the stock market, doing my own investments, opting out of the plan would have worked. That's not an option anymore. We don't get to just opt in and out. That's gone forever. So instead, what you have to look at is the fact that, well, let's say that I have 18 years to retirement. Let's say I'm on this line right here. Now, technically, for this year alone, if I were to not participate in the market-based cash balance plan, if I were to do my own stock investing and invest according to a bunch of assumptions that you can hear about in the first version of this video, the market would win. And the difference between doing that investments on my own or participating in the market-based cash balance plan would have been a difference of $1,747 for this year's income for me. So now we don't have that option of opting in later. So let's say I have to decide right now at 18 years out whether to opt in or not. Well, I'm going to lose out on $1,700 of this year's income in advantages that I could have gotten through the other way. But you have to take account for all these other years now, from when I have 17 years left, and 16 years left, and 15 years left, and 14 years left, all the way up. So as time goes on, the margin gets smaller toward the break-even point. So I might miss out on $1,700 this year, but next year I'd only miss out on $600 overall. And then the next year, I'd actually be benefiting $377 by being in the market-based cash balance plan, and it goes from there. So by the time you get a few years into this, if you take the sum of these, already down here, $8,500, even though I'm below optimum on years 17 and 18 until retirement, just the difference of what I gain on these other years until retirement, I'm already up $8,500, even though I opted in early to the plan. And so what I've done is I've shown the cumulative margin and the cumulative win in this new column. And what it does is it takes all these values into account, and it says whatever number of years you have until retirement, this is what actually wins and what the margin is. So for me, with the parameters I have set up at the top of the spreadsheet, if I'm in 24 years or less until retirement, the market-based cash balance plan is a cumulative win for me, as opposed to earlier when that point would have happened at 16 years up here. So that is identified right here in these purple blocks. Basically, it says for somebody in my shoes with these assumptions, if you are age 35 or older, you should not stay out of the plan. You should participate in the market-based cash balance plan, because in the long run, overall, it is an advantage to you. And the margin on that for this year would be $13,000 worth of advantage, almost 14. So that's a really good deal. The one other thing I put in here, and I haven't implemented it the way I really want to, but I really want it to be in here because it's an interesting point, is right now our 401k excess dollars are subject to ALPA dues. That rate is 1.85% right now, and it's kind of a, I shouldn't say screw job, but I'm going to say screw job, because the 401k excess money is given to us in lieu of getting a pension. And so really that is retirement money, but because of some goofy loopholes in ALPA bylaws, they take dues money out of it. However, the market-based cash balance plan is inarguably a retirement plan, and so any money that goes into that is not subject to dues. So if you participate in the market-based cash balance plan, you get a 1.85% bonus every year because of dues money that won't be taken out of your paycheck for the money going into the market-based cash balance plan. So under the potential advantages for this year, I would get an extra $33,866, and that also includes $627 of ALPA dues that I won't have to pay this year if I participate in the market-based cash balance plan. That doesn't look like a whole lot, but if you aggregate that over 30 or 40 years and your income increases as you become a wide-body captain, we can throw that in here. Let's put 350 captain, jumps to $877, and it just keeps going from there. So. But there it is. There's the calculator. You can look at it. I'm holding a meeting in just a few minutes, a discussion online to kind of talk through some of this. If there's desire, I can do more of those live online discussions with people to kind of help just talk through the ideas and the principles. But I would encourage you to take your own version of this spreadsheet, use File, make a copy right here, or File Download, and you can put it into Excel or some other formats. You can put it into a CSV file and convert it to whatever Apple's spreadsheet program is if you want to. Don't try to edit this one because it won't let you. Download your own copy, but put in your own parameters, take a look at it, see what you think, and then if you need to talk to a professional financial advisor, which I highly recommend, send your copy of this spreadsheet to them. The minute they look at it, they're going to know what this is. They will understand it well better than you can, or probably even I can. And they will be able to tell you right away if this is a good deal for you or not. But thanks for watching this. Let me know in comments or hit me up online if you have any questions. And thanks.